Well, you're back. Thank you for stopping by. If you're new here, my name is Adventago, and if you desire to become the change you want to see in the world, love what you do, become seen and trusted in your niche, have the income to do what you love, and the power to say no to whatever you hate, then you've come to the perfect place. Make sure to follow me on social media. And today's video is very important. We're going to be going over Stop Being Nervous. 6 investment ways to prepare for the upcoming crash. This one's important, make sure to share it with a friend. Today, I want to go over 6 places where you can invest your money through this economic uncertainty. That way, you can work to build up your wealth and have your assets help pay for your lifestyle. Because at the end of the day, that's what wealth is, when your assets pay for your liabilities. I want to talk about 6 places where you can find your investment money and where you can find opportunities. Starting with number 1. Invest your money in well-established companies. The way you invest in value companies is by investing your money in the stock market. And now you can look at investing in individual companies, or you can invest in ETFs. A couple of examples of this would be investing in the S&P 500 ETF, something like Vanguard 500 Index Fund ETF, Technology Select Sector Fund, SPDR Fund, SPDR S&P 500 ETF Trust, Vanguard Dividend Appreciation Index Fund ETF. Now, disclaimer. The content is for informational purposes only. You should not construe any such information or other material as legal, tax, investment, financial or other advice. I am not a financial advisor, I'm just here to share some information. I use a platform called Tastyworks, link in the description down below for more. They are an investing platform that has everything you need without all the rubbish that most platforms come with. They are affordable, pricing, intelligent trading bots, super helpful free training. Their fees are extremely low. They have a quick customer service line that can get to you in about a day or two without any hassle, and they have tons of tools to choose from that you might need. But what I'm talking about is investing your money into the value companies, which are bigger, more foundational, have bigger profits, and have been around a lot longer. If we go into a severe economic recession or even a depression, these are the companies that are more likely to survive because they've been around a lot longer. They have more cash, they have access to more capital, and so hopefully they'll be able to survive a bigger downturn. The reason why I mentioned the S&P 500 ETF is because that is a group of the 500 biggest companies on the stock market. The bonus to this is that if you don't want to spend the time to try and find the best companies to invest in, if you don't want to keep up with their earning calls, if you don't want to spend time researching these companies instead of doing all that, you can invest in an ETF that gives you exposure to the biggest 500 companies. The second place for you to potentially invest your money is what Andrew Hedgeson from Nomad Capitalist talks about, which is number 2. Invest in emerging and frontier markets. An emerging market is a country that is not in the first world, but is on its way and developing. These are some of your smaller countries or some of your more economically growing countries, and you have the opportunity to invest in these countries through the stock market. However, on the other hand, you might have to go to that country and physically invest, since some countries don't have a fully fledged stock brokerage. Also, you can find hidden little gems if you have boots on the ground that you might not have found if you were only online. You can invest in individual companies, or you can invest in ETFs. If you are not willing to put in the time to research a company, research a country, and then research its currency, I don't recommend you go out and individually invest in companies, because now you're taking on a lot more risk. You're not only investing in a company in a country that you live in, but you're also investing in a company in a different country that operates on a completely different currency than you. If you don't want to put in all the research into looking for emerging markets, an ETF could do you good, because that will give you exposure to many countries. A couple of them are VanEck Russia Small Cap ETF, Schwab Emerging Markets Equity ETF, Vanguard Emerging Markets Stock Index Fund ETF. This is giving you exposure to companies, countries and currencies outside of yours. One thing that I want to caution here is you can expect a lot of volatility. There is a big debt crisis that the whole world is facing right now, and it's even caused some countries to literally go into default. Countries like Venezuela and Sri Lanka declared default on their debt, and we have a few other countries that could potentially default on their national debts too. Because governments around the world had to create a lot of inflation to help fight this economic slowdown due to the COVID-19 84 and other government spending operations that they had. Because of that, you can expect a lot of volatility, uncertainty, and a lot of craziness, not just in our economy, but in economies around the world, and even on bigger scales over there, because they're not as stable of economies as first world countries. That means you can expect a lot of craziness, but it does create some opportunity in the form of investment if you're willing to take on some of that risk. You must understand that there are a lot of risks, but it does come with a different type of upside, because now you're not only investing money in your country, it's a way for you to hedge what's going on in your country, because you're also investing in different currencies and economies. The third place where you're able to find opportunity is in number 3, the cryptocurrency and blockchain technology market. Cryptocurrency has been hit pretty hard, and you've seen some of the not so good coins already on the verge of being completely wiped out. We're probably going to see some more scams in the cryptocurrency, more coins getting wiped out, and more coins going from boom to bust. This is where it can create opportunity when you're looking in the right places. If you believe in cryptocurrency technology and you believe in the blockchain technology, this can create an investment opportunity for you if you find a good fundamental investment. Of course, you must believe in the investment. If you don't believe in cryptocurrency, don't blindly throw your money in there. You must first believe in it, and then you must find a good asset. And you don't want to throw your money into a meme coin because you hope it's going to have humongous rises. This is where fundamentals matter, especially when things start to go down, because now smart money starts to come out and all the dumb money starts to go away. When times are good and money is plentiful, people can make money with dumb money decisions. But when money starts to become tighter and you start to see some of that free money fade away, that's when the smart money starts to come in, and this is where you want to find good opportunities. If you believe in the crypto altcoins and the technology of the blockchain and you want to look for good opportunities, this can create opportunities for you with everything else going on in the economy, the world and the cryptocurrency market. But again, you must be willing to withstand the volatility. If you're looking for an easy, low fee and quick way to buy and sell cryptocurrency, please go to Tastyworks. Tastyworks makes it super simple, not only for you to buy and sell crypto, but they also have a very sophisticated system which makes it super simple for you to set up a recurring buy for whatever cryptocurrency you want. If you want to keep buying, for example, Luna, instead of trying to time the dip, what you can do is set it up so now you buy every week, every day, or every 2 weeks, then it will automatically make that purchase for you. Plus, they have great customer service that will get back to you in 2 days or less. I mainly buy the major coins and I set it up on a cost average system. That means I don't care if the market goes up or down. I'll buy a little bit every day. Another cool thing about Tastyworks is that they allow you to use leverage so you can invest with more than what you actually have. But big disclaimer, be careful because you do not want to lose your money and own your brokerage money. Most investors do not do well doing this, so I would not recommend it. I am not a certified financial advisor. By the way, click the link in the description down below to get started investing in a diverse pool of investment options with Tastyworks. The fourth place where you can consider investing your money is in number 4, physical gold, silver and other precious metals. Robert Kiyosaki looks at gold as God's money. I buy gold in a passive strategy where I'll buy a large quantity and then I don't buy any more. I simply leave it in a safe and secure location. I don't care what happens in the day-to-day price of gold, whether it goes up or down. I bought a little as another place of saving my hard-earned money. If I had $10,000 worth of cash and $10,000 worth of gold today and I didn't touch it for the next, let's say 15 years, the gold is going to have more buying power in 15 years than the cash, because our cash is losing value literally every single day. And as our cash loses value, the value of gold or the price of gold relative to cash goes up. As the value of your country's money goes down relative to gold, the price of gold goes up. Gold is more of a store of value. Our cash is a currency, a way to buy and sell things. I love to invest, and to me, gold is more of an insurance than anything else. But the point I want to emphasize is, if we continue going down an economic slowdown and the Bank of England, the Federal Reserve, the Bank of Asia or whatever private money lending institution you have in your country wants to fight the slowdown in our economy by cutting interest rates and stimulating the economy, that would create significantly more inflation, which would hurt the value of your currency, which in theory should cause the price of gold to go up. Gold is an alternative way for you to save your money as opposed to only storing cash. But it also does have its risks because gold is volatile. However, it's an alternative and a way for you to save your hard-earned money. If you have some extra cash sitting around and you want to find a way to save it in an alternative way, gold is one potential option for you. Let's be honest though, why do you think the Rothschild family does the exact same thing? Because it works. Shh. They don't want you to know who they are. The fifth area where you're able to find opportunity is in the number 5, tech sector. Tech is going to be hit especially hard in this economic time during the tech sector has seen a lot of growth, help with cheap money. Over the last number of years, you've seen a lot of growth companies like Silicon Valley and others, and even on the East Coast, where companies have been getting insane valuation because investors have had a lot of cash, venture capital companies and institutions were able to borrow money super cheap and they needed a place to put it. This means they were willing to invest this money into startups that were not generating much money or sometimes any. And they were willing to throw money because they would hope that these startups would one day become profitable. Unfortunately, the interest rates are going up, and now that the economy is starting to slow down, the venture capital firms and the institutions that were investing in these companies are now starting to say, well, we can't keep throwing cheap money into you. We need to see a profit. We need to see a return. If these companies can't turn a profit because they've been selling their products at a loss for so long to try and grow their user base, and people don't actually want their product, that's when you run into issues. That's where tech companies across the board right now have been getting smacked because valuations have been dropping. People are realizing that the valuations on tons of these tech companies were insanely high. It never made any sense. We've been seeing valuations drop. We've been seeing hiring freezes across the tech sector, and we've even been seeing a lot of layoffs. What does that mean? Well, that means the tech sector is going to be hit extremely hard. Also, the good companies and the bad companies are going to be hit hard. Some of the bad companies are going to be swept away. However, the good companies are also going to be hurt because of everything going on with the bad companies. People are going to be scared. However, this creates opportunity if you can find these good companies. Now, the question is, how do you find these good companies? Of course, you can do your research, you can do fundamental analysis, but if you don't want to invest the time to do that, you can consider investing in some of your money in tech-heavy ETFs. Some of these including Technology Select Sector Fund, SPDR Fund, and Adventago QQQ Trust Series 1. If tech continued to get smacked, this could create an opportunity for you, but please understand that it comes with a lot of risks, because if the economy continues to go down, that's going to hurt tech companies, especially when they haven't been profitable or when they needed cheap debt and high valuations in order to grow. It creates opportunity if you're willing to invest for the long term. This is also where your investing strategy plays a big part, because if you're cost averaging and you're buying shares over time, that way, if the market continues to go down, you don't try to time the market and you're averaging your shares. That creates an opportunity for you. If you want to make money when it comes to being an investor for the long term, you must have the patience to understand and believe in what you're investing in. The sixth place where you can see opportunity is in the number 6, real estate market. This one is interesting because this one is extremely dependent on what your banking system does. If the banking system in whatever country you are in continues to raise interest rates, it is going to make real estate significantly more expensive. If real estate housing prices become significantly more expensive, you're going to see a smaller demand for people wanting to buy homes. If you have less demand for people wanting to buy homes, that could ultimately push home prices lower. If that happens, that could cause a real estate correction, and depending on everything else going on in the economy and with inflation, that could potentially trigger a real estate crash. Thankfully, we don't have the same factors today as we did before 2008 crash. However, we have more economic and inflammatory issues today than we did before the 2008 crash. Home prices have gone up significantly, and now with rising mortgage rates, it is making it very expensive for people to buy a home. But if the major banking system in your country changes course and they start cutting interest rates, that could push home prices up even more, because then people are going to say, I can go out and get a mortgage at 2.5% again. I don't want to miss this opportunity. Then you could see a whole new flood of buyers into the market, pushing home prices up even more. If you enjoyed this and you want to continue the fun, make sure to follow me on social media. My handle is @Adventago, so you never miss another important post. Share this with 2 people, since these events affect all of us and we all need to have the information to thrive. And last but not least, if you want to discover the invisible key to recession-proofing your business and how you can massively thrive even during a terrible economy, click the link in the description down below and get my massively discounted book, Skills, Scale, Sustainability. It's on Amazon. Thank you again for watching, and I will see you in another video. Bye!